It just happened again. Tesla Korea's official Instagram page has now just posted this cryptic image of a zero. In recent days, and really over the past week, you've seen more and more of these cryptic messages, most of which post on X from the Tesla Korea official X account. As in, they just posted this image yesterday on their official X account with many zeros. Speculating here, this looks to be zeros as in code. There is a fair bit of speculation that maybe the zeros just mean there will be zero interventions after the October 10th robotaxi event, but I think more reasonably we are looking at FSD entering the Korean market here very soon. Now, as I've also explained to you guys in recent days and weeks, Tesla's stock is already experiencing a short squeeze. This is more of a melt-up short squeeze. You've seen all in all about 10 million shares in recent weeks that have been covered on, and as you go higher and higher, there's more pain for these shorts, and as we get closer to the October 10th robotaxi event, minus any bad news in markets, Tesla's stock is likely to explode higher from here, and we talked about that a little bit more extensively in the last video. We'll cover that in this video as well. We will also go over some of your other Tesla stock news. Tesla's competition, Volkswagen, is not doing good. They just lowered guidance again for the second time in just a couple of months. And I think most importantly, we will again go over the economic data for this week and whether or not I'm concerned, if I'm hedging, if I'm going long before this data comes out, and what comes out when and when you need to be prepared. But let's start here. Volkswagen has cut its annual outlook for the second time in less than 3 months, citing a weaker than expected demand. Volkswagen now expects 240,000 fewer vehicle deliveries than before. They expect to deliver 9 million cars, down from 9.24 million. Tesla has also launched these winter tires recently for $3,000, and as you can see here, you got some pretty aggressive tread on them. They seem definitely like winter tires if I've ever seen winter tires before. They do cost $3,000 a set. In a new interview, MMA fighter Sean Strickland says he loves his Tesla, calls it the most American-made car. Now let's do a brief review of the economic calendar and the major events that we have for this upcoming week. And tomorrow you get Chicago PMIs. You're expecting things will get a little bit better from 46.1 to 46.5. The Dallas Fed Manufacturing Index, this is an important one because we had the Kansas and the Richmond Fed manufacturing data since the Fed cut rates 50 basis points, and both of those came in way worse than expected. Now, if the Dallas Fed Manufacturing Index also comes in bad, then I think that's going to be really bad. Okay, last month you came in at negative 9.7. You're expecting negative 4.5. So you're actually expecting an improvement there. If things get worse, well, that's a problem. That data comes out at about 10 o'clock in the morning tomorrow. Fed Jerome Powell will give a speech at about 1:55 p.m. tomorrow. We're not sure if we're actually going to get anything of material substance. Last week we were expecting a speech and Powell did not say anything on the economy. He did not say anything on monetary policy, but we'll see. I do believe this speech tomorrow from Powell will be one with kind of a Q&A like environment, so we might get a little bit more. Be on the lookout for that. Tuesday, you get ISM manufacturing PMIs. It's also the first day of October, which we'll see. If October 1st is a bad day, then historically, you tend to have pretty large rallies throughout the rest of the month. If the first day really of any month is bad, then usually the ending of the month is pretty good. Now, I do expect some kind of election correction in the month of October, so that can change things a bit nonetheless. Now, 10 o'clock in the morning on Tuesday, your first set of major economic data, you will get the ISM manufacturing PMIs, expecting this to come in unchanged from last month. Last month you were at 47.2. You're expecting 47.2. Now you will also get manufacturing new orders, prices paid, manufacturing employment. I think employment's probably going to be the most important component of this ISM manufacturing PMIs. If employment is getting worse, then that's something I don't think Wall Street's going to like too much. I mean, some weakening, fine. It's not a big deal. We can absorb that. But too much weakening, and yeah, that's a bigger problem. JOLTS job openings is the first, I guess, if you will, like massive catalyst of this week. You're expecting job openings to decline, only about 2,000 though, from 7.67 million down to 7.65 million. If that were to come in, let's say 100, 200, 300 plus thousand lower than that, that's a problem, because right now, apparently, the unemployment rate is rising because there's more people entering the workforce and less job openings, less available jobs. That means the unemployment rate is going higher. Okay. Now, if job openings come down, then that is potentially sending a signal that the unemployment rate is going to go higher. So that's a big deal. Throughout the day on Tuesday, you'll also get a bunch of Fed speakers: Fed Cook, Fed Bostic, Fed Barkin, Fed Collins, maybe another one or two mixed in there. You will also get the Dallas Fed Services Index, expecting that to come in -4. Last month was -7.7, so expecting things to get a little bit better there. But I think JOLTS job openings is really going to dominate the headlines, and manufacturing, if that comes in bad. Now, on Wednesday, the only real catalyst we're going to get, besides a couple Fed speakers, is the ADP employment change. We're expecting around 90,000 net job ads. This is not the government's data. This is private data. So I think we want to pay attention to it. But, I mean, is it going to tell us a whole lot about the non-farm payrolls? Not really. Thursday, you will get ISM services PMIs. Again, that's kind of like what I said. If manufacturing's not doing great, that's one thing. But if services can help support things, if services are not as bad or they're getting better or whatnot, that would be good. We're actually expecting not much change from 51.5 last month to 51.5 for September. So we're not expecting really any change at all. If this comes in below 50, you're going to be in negative territory. That's not something Wall Street's going to like. But again, with the ISM manufacturing PMIs and ISM services PMIs, you get employment data for both of these, okay? So ISM services business activity, employment, new orders, and prices will all be coming out at 10 o'clock in the morning on Thursday. Specifically, employment's going to be important because last month we were at 50.2. We're expecting this to fall to 50.1. So more weakening in the employment area of the services side of this economy, but we're still not expecting it's going to be negative. So if it does come in negative, anything, again, below 50 is negative, that will be a major problem. Now, Friday, it's really your big data. You will get non-farm payrolls. You're expecting 145,000. Citibank came out last week, I believe it was on Friday, and said we could have a 70,000 jobs number. And let me tell you right now, if we come in 50% below the estimates, Wall Street is going to throw up in your face, or on your lap, if you will. Markets are going to be down 3 to 5% on Friday. That's a risk. Now, I think before the election, the GOV does not want the economy to go DOA, okay, or DOE, whatever, dead on arrival. They don't want that to happen, okay? It's like the worst thing that could happen before the election. So I'm not too worried about this week's economic data. I think the Wall Street might be a little bit jittery heading into Friday, and it would make sense if stocks do have a sell down. But am I that concerned? No, but I do think there's maybe a 20, 30% chance, closer to 20% chance that we do miss on non-farm payrolls, 100,000 jobs or maybe less. And that would be the bigger problem. I think the vastly most probable scenario is we likely come in between 120 and 160,000 jobs, which I think would be negative, right? If we come in 120,000, I would expect markets would react negatively to that, but it's not going to be that big down day. It's not going to be that, gray swan event, if you will. Now, the unemployment rate will also be important. As I've talked about before, the unemployment rate in actuality went from 4.26% down to 4.22% last month. So it looks like it went from 4.3% down to 4.2%, but there's rounding that goes into this. So you really want to look at the decimal, okay? Again, as I said in other videos, if the unemployment rate goes up three points from 4.22% to 4.25%, it's actually going to look like it went up 1/10 of 1%. In all reality, it went up 1/3 of 1/10 of 1%. Okay. Now, if the unemployment rate goes up to, let's say, 4.34, that would be a big jump from 4.22 to 4.34, but you're still going to only come in at that rounded 4.3% number, but it's going to be closer to 4.4%. Okay. So it depends on where the rounding takes place. So the actual decimal of the unemployment rate is more important than the rounded number, because you could have a rounded up number that's a little bad, or you could have one that's really bad, right? That's showing a lot more weakening. And that's the big thing that we want to be on the lookout for coming on Friday. And yes, there's going to be a lot of catalyst between Monday and then Friday. And I expect markets will react potentially negatively to manufacturing, maybe services. I'm not too optimistic about those, but I do think, Friday, we're probably not going to have a, economies collapsing kind of jobs report. I don't think that's good politically. And that's just my view. Maybe I'm being a little too biased here, but it seems like lately there has been a mismatch with what we're seeing in the economy with what the actual data is telling us about the economy. But let me know your thoughts on that down below in the comment section. Now, the big story, really, in my opinion, over the last couple of days and weeks is the shorts that have really started to cover on some of their short positions, while you're also starting to see a big influx of option activity. As they said on CNBC in, I believe it was the last video I posted, basically all the option activity in our markets is in two stocks. It's in Tesla and Nvidia. And Tesla tends to always be a high-flying option, stock, right? People trade a lot of options on Tesla. They always do. But when you see these influxes like we've started to see over the past week or so, it generally leads to higher prices. It generally leads to a larger rally. Now, what we've seen over the past week in total was 371 different trades, totaling $416.02 million with a positive order value of 81%. What we've seen on Friday alone was 156 different trades, totaling $337.14 million with a positive order value of, again, 81%. And option activity has been split about 65% calls, about 35% puts for the next couple of weeks of expirations. Okay. Now, once you get to, October 18th or even October 11th, there's more puts being bought for those expirations because normally if you rally into an event, you do get to sell the news event. And I think there's a really good chance that we do get to sell the news event. Like, don't be surprised if Tesla stock sells off after the robo-taxi event. And that's just me being 100% honest with you. Now, short interest of free float sitting at 2.77%. This is down from where it was just in August, about a month and a half ago, at about 3.8%. So you've fallen a lot in the short interest. You've seen over 25 million shares that have been covered, closer to 30 million shares that have been covered over the past 2 months. So this is really a process that has been going on for a while. And I think it's going to ramp up in this upcoming week, heading into the robo-taxi event on October 10th. Now, if the data comes in bad or something, if markets fall, then that's obviously going to negatively affect Tesla. But as long as nothing breaks out there in markets, I think Tesla stock is going materially higher from here. 260s to 300 to 320. Anything above 320 and you're in full-blown FOMO mode. But nonetheless, you do have $19.59 billion currently sold short in Tesla stock, totaling 77.08 million shares that are currently sold short. And on Friday, you had about 331,000 shares that were covered on. Sentiment for Tesla today is actually better than it was yesterday. Today, you're neutral at 46. Yesterday, you were bearish at 40. Message volume today is low at 33. Yesterday, it was low at 42. So a little bit lower message volume today, of course, makes sense. It is, football Sunday. So, a lot of people relax on their Sundays and they're not paying attention to markets or whatnot. So congratulations. If you are ahead of most people already if you're in markets, but especially if you're watching this video over the weekend, yeah, you're gonna do some big things in your life. Okay, participation ratio is high today at 57. Google Trends data for Tesla is showing some incredible signs here in the last couple of days, going from a recent low on the Model Y of 24 up to now 27. The Model 3 hitting a recent low of 22, now at 25. The Model S was just at 9, now it's at 10. The Model X was just at 8, now it's at 9. Cybertruck going from 44 to 50. So in the last, couple of days, you have started to see Google Trends data ticking upwards for the United States. And that is a great sign because we don't get a lot of data out of the US as far as Tesla deliveries or insurance numbers, registration numbers, right? None of that stuff that we get out of Europe or China. So this is probably the best gauge that we have to try to predict what demand is looking like in the US. And I will tell you, last quarter looks like demand was pretty good. It looks stable overall. But we'll talk about that a little bit more in the next video when I give you a price prediction for what I'm expecting this week, what I'm expecting for Tesla's delivery number coming out on October 2nd, which is going to be on Wednesday pre-market. And let me tell you right now, I'm pretty excited about Wednesday. Again, it depends what happens with the economic data. Markets can be in a bad place or whatnot, but I think Wednesday is going to be a pretty good day for Tesla, and I will give you my official estimate for Tesla deliveries also, again, in the next video coming out at 8 p.m. tonight, Eastern Standard Time. You guys have a great rest of your day, and I will see you in the next one.